Morning folks, I'm going to make a quick video update. I'm going to cover three things only, and that's natural gas. I'm going to cover gold, and I'm going to look at the dollar yen. That's all today. I'm a little tired of making videos. It's kind of exhausting, and I've had a very busy week, and it's Friday, so I want to do this very quickly for you. I wasn't going to do a video, but let's have a look at natural gas. First of all, let's have a look at this day chart, and I've just drawn some very, very rough sort of guidelines on here, some interesting patterns and ideas. Now, so yesterday we fell back sharply from $3 down to $2.78. That's where we are at the moment. We've moved up fractionally from there, but not much. I want to show you that this pattern repeats what we've seen on a few occasions. We saw that happen sort of after a rush up. We get a pull back down and then move up to the top of the channel. It happened there, and it happened there, and it's happened now. So look at the move down on these occasions. I hope I can express this correctly. There's the big move down, then we had a consolidation, a little spike low, and then a move up to the top of the channel. Difficult to see there through the green, but that spike is to the top of the channel. Then we saw something similar over here, the spike, big sort of a spike up to resistance like we saw yesterday, and then a strong move down, spike low, then a move up to the top of the channel. We'll have a look at it on the 4-hour chart, it looks easier. And then we get to where we are today, a spike up, move up to resistance, spike down, consolidation, and then are we going to see a move up to the top of the channel straight after this? And that's why I put a question mark. But you can see it's happened on every occasion. We've still got this double bottom at $2.50. I'm now long in from 251, a quarter position, and 277, a quarter position. So my overall position now is around about $2.70 net long, well, completely long. And that's a 50% position, but I'm watching very closely. I think this pattern could repeat on this occasion. We want to see in the next 2 or 3 days, we've got the weekend, so we could be looking at Monday. We want to see this move up to the top of the channel. That remains my target now at around about $3.15 to $3.20. If we look at the 4-hour chart, we'll see a similar picture. And I've kind of drawn some similar things that happened on the 4-hour chart. And I've drawn these three sort of green circles. First one, let's have a look at over here. We had a move up to resistance, fall back down, a sharp move down on the 4-hour chart. And then look what happens. You get this sort of 3-4 candle consolidation, spike below that previous low of the consolidation area, and then the move up to the top of the channel. That's what happened on the 21st of June. Let's go across to the next occasion, and we saw exactly the same thing here. Move down. Remember, we traded this one down to about $2.47, $2.50. Look what happened. We moved down, made a little spike, 2 or 3 or 4 candle consolidation, and then the big move up. And now we've seen exactly the same thing here. Move up to resistance at $3 on this occasion. Big move down and a consolidation, 3 or 4 candles in a row. We haven't seen that spike yet. I've already taken a second long position, another 25% where we are at the moment. We haven't seen a spike down low to sort of create a new bottom formation just yet. I'm looking for that, and if we do get that, I'll put on another 25%, bringing my position up to 75%. So we're looking for something similar to this. We're looking for a spike. I've already got an additional position, remember, but we're still looking for that spike to add some more. There's the same thing there, that little spike. On the natural gas charts, on the 4-hour candles, if we see these spikes, it's normally a really good sign that the market is about to change direction. I've pointed this out on previous videos. So that's what we're looking for on natural gas. So let's just see if we might just move up from where we are at the moment. My target remains the top of the channel, which you can't see, it's just off screen at $3.15 or 20 up there, and that might have to be on Monday. If we don't hold this level, we've got to go down to the bottom of the channel. That'll take us back to about $2.55. Let's hope that doesn't happen, because we're frankly getting tired of this range now. We want to move out of it. But someone asked me in my chat today in my members community, where's your stop loss? I generally use hedges and not stop losses on natural gas, but I can tell you where it would be, and I can tell you where my hedge is. And if you were using a stop loss, it's got to be beneath these 2 lows here and beneath this channel. It's a really clear, obvious reversal point. I think we've made and formed a new range now. We've moved up into this $2.50 to $3 range. We've moved out of the $2 to $2.50 range. We're in the next range now. And the bottom of that range is where these 2 green circles are, and this channel bottom and this red support line. And my stop is below here, my actual hedge reversal, where I'll be fully hedging, is at $2.43, just below those levels, below the channel, below the red line, below these 2 spike lows. So It's really quite simple. But what we're looking for now is a spike on the 4-hour chart. We've got a few candles to go today, another 2 or 3 candles, and then it's into the weekend. And as you know, anything can happen on the weekends. We could have a weekend gap up, gap down, spike low, spike high. Who knows? We'll have to wait and see what happens with that. But so long, I've got a 50% position long again. Average price $2.70. It's actually $2.69. 268.50. Let's call it 270. But if we can get another spike down and a move back up again on the 4-hour, then I'll be looking to add another 25% in. And now starting to load my trades up as we're getting confirmation that this range is starting to push towards the upside, and that the weaker, lower sort of part of this range is now kind of negated. I'm talking about below $2.50. It's not fully negated. That's why we have a stop loss or a hedge. But this lower part of this overall range between 2 and 250 is now kind of behind us. We're now into this next level, and we're looking for a push up to the channel top. And once we get there, we might even get to $3.50, 40, 50, 60, or 75, which is quite a long way above us. That's in this flesh-colored zone up here. That is the overall target, and we could even get beyond there. People are starting to look a little bit more optimistic on natural gas. I'm not too sure about that myself. I'll settle for $3.50. But at the moment, we want to get through this $3 level again. We can get through $3, hold above it, up to $3.15, and then we'll start to build upon that. We'll probably get some pullback. We could always get back down to the bottom of the channel again. Bear that in mind. That's natural gas. Now, I want to talk about gold very quickly. Let's just fix this chart. So let's go to gold. I'm going to cover this very briefly. Now, gold has fallen back to its 78.6% Fibonacci. This is a beautiful chart, by the way. It's beautiful in its simplicity, in its elegance, in its beauty, in its symmetry. This is what chartists look for. I'm a chartist. I'm actually busy trying to apply to do a CMT charting qualification. That's a whole story which I'll tell you about at some stage. But I love charts. I also pay attention to the fundamentals and what's going on in the world around me and the psychology of the markets, of course. But what I see here is a beautiful chart. We've pulled back on gold after breaking down through this channel. We pulled up to somewhere near the channel top and fell back down from there. If we draw a Fibonacci from this low to this high, so from 1895, call it 1900, up to where we got up to about 1985 in this last recent rally. This is a day chart. We've meandered slowly all the way back down here again. Normally, when you see the market moving down, it's a case of the bulls climb the stairs, the bears fall out the window, or take the elevator down, or whatever you want to say. Normally, you'd see the move down quite dramatic. This one is not. It's meandering down. It's not aggressive. It's not convincing. It's just dribbling down. And we've got to the 78.6% Fibonacci. If you followed my stuff enough, you'll know this is one of my favorite Fibonacci levels. Not only have we got to the 78.6, but if you have a look at yesterday's candle on gold, it's a perfect inverse hammer candle pattern. These are one of my favorite candle patterns because you know when you're wrong. The moment we start to move convincingly below here, we know we're wrong. We're long from 1919, tricky one to say, looking for a move back up to these highs, back up to 1985, and eventually a retest of the channel underneath, and then a move up to the all-time high at 2070, and then beyond there. But can we hold this today? I think we've got a chance of it. I don't know, but I think we've got a very good chance of holding this 78.6% fib. If we do hold it, often the 786 will act as a convincing catalyst or a springboard for quite a dramatic move, and we could see today seems to be very quiet. There's not a lot of news. There's PPI coming out from the US. We did see pound numbers, British economy, GDP fantastic, and we saw industrial production good, manufacturing good. All of a sudden, Britain's looking quite rosy. Don't know what happened, but there you go. Can't trust these numbers totally, of course. But we've got the PPI numbers coming out from the States at 8:30 Eastern Time. That's 3 hours from now. So can we hold this 786 after yesterday's inverse hammer candle pattern and form a dramatic move up? We could get back up to as high as $1,950 today. That's gold. Now, a very interesting thing I want to look at, apart from that, is one more thing. That's the dollar yen. Now, I'm going to draw something on this chart, and I can't cover this in too much detail. I'm going to go across to a monthly chart and show you something super interesting. I put this on Twitter, so have a look at Twitter. I've drawn some arrows and lines in here. But look at this. This is the monthly chart on dollar yen. First of all, what's interesting is the move down took 2.5 months. The move down from 150 to 128. Early or late last year, early this year. The move up has taken 1, 2, 3, 4, 5, 6, 7, 8 months almost. Now we've seen this classic pattern of, like I said earlier, on the prior chart, bears fall out the window and bulls climb up the stairs kind of thing. It's a very unconvincing move up. Big window fall there. Dominant pattern on this chart on dollar yen is down. Look at these two huge monthly candles, and we've just seen this dribbling up like we saw in the other previous chart. And what we've got here on the monthly charts, first of all, we've got the 78.6% Fibonacci above us here, this red line. We haven't quite got there yet, but last month was a perfect hanging man candle and a tweezer top. So tweezer top meaning the high of last month was exactly the same as the high of the previous month. It's also a hanging man candle pattern, which moved down to the trend line. And this month, where we are right now, we've moved back up to that tweezer top, just testing it right now as we speak. So let's have a look at the day chart and see where we are on the day chart. You can see there we are. That's the top that we're talking about. This is the resistance level. Starts here at the tweezer top that we saw on the monthly chart. Ideally, we won't get above this level. That's the plan here. And that we'll begin to move down on dollar yen. See that big collapse down and then this sort of ambling up. Now, the Bank of Japan's been awfully quiet and everyone's gone bullish on dollar yen. Everyone. If you look at, I don't know, Credit Suisse and Reuters and all of the news outlets, including JP Morgan, etc., they're all calling for 150, 155, 160 on dollar yen. The moment you see that coming out of those guys, by the way, Credit Suisse was saying 125 just a month ago. Now they're saying 155. So these guys are all over the show. But they're all calling for this to get to 150, 155, 160. That's when you should be worried about it going up, because now I think actually that puts more pressure on it going down. Maybe there's a cunning plan in these statements they make. I don't know. But quite often they're wrong, obviously. So we're at this level here and we're just trying to form a top. And look at that, we've got 3 moves up, 1 move, 2 moves. This is the 3rd move up, 3-wave move up. Could we be forming a top? Let's look at the 4-hour chart, go a little bit closer in. And there we are, we're just starting to dribble down, not convincingly just yet. Now, all of that I've said on dollar yen doesn't mean it's going to come to pass, but those charts are awfully interesting and quite compelling for the downside, particularly the tweezer top on the monthly chart and the hanging man candle, and that big collapse and the dominance of that pattern on the monthly chart or the daily chart, weekly chart, whichever one you want to look at. But there's the monthly chart, massive move down and then just creeping back up to this tweezer top. Not convincing at all. That's the dollar yen. We've talked about gold and we've talked about natural gas. That's all I'm going to do today. Have a fantastic weekend. It's wonderful to have you watching. And if you've enjoyed it, please subscribe to this channel and give the video a thumbs up. And if you want to become a member, you can press the join button. I do send out extra stuff to my members at $7 a month, and you can just join. If you don't like it, you can cancel. So take care. Speak to you soon. Have a great weekend.